On March 24th, Donald Trump announced that the United States will be placing secondary tariffs on Venezuela, along with Liberation Day happening April 2nd, for all documentation to be signed and registered, with multiple tariffs going into effect. And ever since then, the crypto market, specifically Total 2, crashed 12% over the past week, causing a massive panic in the market, with the majority of altcoins down 10, 15, over 20% for a lot of the top large cap projects, leaving a lot of people to wonder, are we going to continue further to the downside in April? Is it going to get much worse, or is this negative news priced in? So in this video, we're going to discuss the effect that Liberation Day is going to have on the crypto market, with US tariffs set to impact $1.5 trillion worth of imports by the end of April. Here's what you need to know. There will be new tariffs on top of already announced and existing tariffs, and the result of these reciprocal tariffs will be one of the largest trade wars in history. And with Japan's stock market crashing ahead of Liberation Day, is it just a massive coincidence that the financial year in Japan starts on April 1st? And this has been called the Great Wave, to basically wipe out central banks across the globe from a massive liquidity tsunami. All at the same time, while Bitcoin is repeating the same setup from 2023, with Bitcoin's dominance reaching this multi-year descending resistance. Will we see an alt season for 2025, or is the top come in a year earlier than expected? You're going to discover that in this video. If you hold XRP, pay close attention to this video. And if you stick all the way to the end of this video, I'm going to share with you exactly how you could be able to earn money during a downturn in the market, regardless of whether the markets go further sideways or further down. I'll share with you some proven strategies that our research team has uncovered for airdrops, DeFi yields, altcoin picks, and more when you watch all the way to the end. So if you guys are feeling bullish, regardless of what's happening in the crypto market right now, comment 777. If you're feeling blessed, comment 777. And if you're going to become the first millionaire in your family tree, confirm it by tapping the subscribe button. Let's run it. All right, bull runners, welcome back to the channel. So looking at Total 2, which is the crypto total market cap excluding Bitcoin on the daily chart, Trump made this announcement, and anytime Trump speaks, people listen. The markets dropped 12%. And I talked about this in my previous video, and this is exactly what I said, forming higher lows until inevitably we broke out at the tail end of October in 2023. And so in my opinion, I think that's what's coming for the market for Bitcoin. I think this rally may be a failed rally and we'll come back down for a double bottom, which could be a higher low. But I think we're just going to work our way through this range right here, inevitably break out for a trend reversal to the upside to form new highs for Bitcoin leading into Q3 and Q4 of this year. It's just going to take some time to play out. And sure enough, that is exactly what we're seeing with this failed rally pulling back for currently a higher low right now, down 12% since that tariff announcement was made. And so the real question is that people want to know is, do we continue lower for a lower low than the 11th of March? Because we have been in this downtrend since the 6th of December. And I'm going to explain exactly what it will take to get out of this downtrend that I believe is coming towards the end of this year. So for the next few months, we are in for a jam-packed roller coaster in the crypto market. And although things have looked pretty bleak and absolutely disgusting since the 8th of December, I mean, people that bought in the beginning of December are down 40% on their entire portfolio, whereas people that bought early that have been subscribed to the channel since 2022, 2023 are up on their portfolio that have been holding for a long period of time. And so everyone wants to know on the macro, when is the best time to sell? And on the micro, people want to know, is now a good time to enter the market, or is now a good time to sell out of your portfolio? So we just have to look at the data. We have to look at the facts. So on the daily chart right here on the stochastic RSI, we can see that the D line is at 13, the K line is at 0.55. Now we haven't experienced a bullish cross yet below 20. We are still in a downtrend right now. And so what I would like to see, and I'll give you an example by putting up these vertical lines each time we've experienced a bullish cross below 20 on the daily stochastic RSI, and what that has looked like on the price chart, because there are bullish crosses that do take place below 20 that could be potential fake outs as well too. So you have to be prepared for that, because in this downtrend thus far, there has been 1, 2, 3, 4, 5, 6 bullish crosses below 20 on the daily stochastic RSI, and a few of them have been massive bull traps. And so let's just go through them one by one as we progress through this video. The most recent one happening here on the 1st of March. This is when the total altcoin industry was at $1.06 trillion. Trump announced the strategic crypto reserve with XRP, Solana, ADA, and those three projects, actually Ethereum, not ADA, but eventually ADA might be included, we'll see. But those three projects are the reasons why Total 2 pumped up to $1.24 trillion and rallied really fast, upwards of 16%. And so that led to a massive pump of the market. The time before then, we saw this bullish cross on the 8th of February. The market pumped from roughly 1.17 trillion upwards of 1.28 trillion, and then got rejected from this descending resistance right here. So if I were to just draw this descending resistance, you guys can see we're just putting in lower highs. And so it was a failed recovery rally. And so we haven't seen a trend reversal yet. And we're at a very pivotal point right now in the markets because we need to clear 1.1 trillion. And inevitably, we need to clear this zone right here of resistance upwards of 1.2 to 1.3 trillion dollars. So until both of these zones are cleared, then the bears are going to remain in control. Now, if we look back here to a major fake out, right here from the 29th of January to the 30th of January, we saw a bullish cross all the way down here. And for those of you that don't know what a bullish cross is, it's when the K line in blue crosses above the D line in orange. And the further below 20 that this happens, the stronger the reversal signal. So this happened at 12, but this was a massive fake out because even though it confirmed the bullish cross by both lines passing above 20, we reversed right back to the downside and formed a bearish cross right here at 30. And so yes, the markets did pump in the short term from about $1.35 trillion all the way up here to 1.47, pumping about 9%. It was just a failed rally, and the markets fell off of a shelf, dropping massively. This is actually one of the biggest crashes in a 3-day period in history for crypto. It dropped 31% in 3 days. That destroyed a lot of investors and is the reason why this zone right here at about $1.28 trillion is the new level that the markets need to clear, because it was a very strong zone of support ever since the 26th of November. Because you can see right here, even right here on the 20th of December, on the 13th of January, these massive wicks on the bottom of these candles showing strong buy-side demand where the bulls were aggressively defending this zone. And so when we broke below it, look at this massive wick to the downside. The bears pushed the market cap of the whole entire industry down to $1 trillion, and then the bulls bought it back up. But now we are facing critical resistance at this exact same zone right here on the 14th of February, the 17th of February, the 21st of February. The bears could not reclaim this support, so now it acts as resistance. And as you can see, even Trump's news for the Strategic Crypto Reserve was met with heavy selling into this zone right here. So this is going to be a very important zone to watch moving forward in the future, and the most important resistance that needs to be cleared for a major trend reversal moving forward. But looking back to the previous bullish cross below 20, on the 11th of January, we saw the markets go from 1.35, rallied only 2 to 3% to 1.38, and then drop very, very quickly about 9% into this zone of support before rebounding out of here and rallying up to $1.55 trillion. So this was about to be a major fake out. As you guys can see right here, we saw the bullish cross and then an attempted bearish cross right at 20, but the bulls pushed the price all the way up here. And so this is why it's important to look for bearish crosses above 80 and bullish crosses below 20, because on the macro, whenever you're buying into the markets on bullish crosses, on macro timeframes, like right now we're on the daily, we'll go into the weekly in a little bit, but that's a very, very good long-term strategy. Where a lot of people get wrecked in crypto is when they buy bearish crosses above 80 when all the momentum has already been seen in the market and we see reversals above 80. For example, right here, look at this bearish cross on the 5th of January. That's when the market cap dropped from 1.5 trillion all the way down here to $1.25 trillion. And so you can do this for yourself. Just go on TradingView, click on indicators, and then add in the stochastic RSI. You can adjust the time frame for yourself, and you can add in these vertical lines to see. One of the previous bullish crosses below 20 was on the 22nd of December. The market cap went from 1.28 trillion and bounced up to $1.4 trillion. So this is good for spotting short-term opportunities and entry points in the market, even with fake outs if you're planning on trading over the course of a couple days, because this was another major fake out and a bull trap on the 12th of December. We experienced a bullish cross. Both the K line and the D line passed above 20, and then just bearish cross immediately back to the downside. So that was when the market cap of the industry bounced from like 1.36 trillion all the way up to $1.6 trillion and then reversed for a lower low. So right now, what I'm waiting and I'm watching for on the chart is for a bullish cross to happen. And we're not seeing that yet. The K line is at 0, the D line is at 13. So I think the D line is going to come down a little bit further, and then we're going to see it intersect the K line, and we'll see where the price action is on the chart at that exact same time. So I would just expect us to chop within this range for a little bit right here while the stochastic RSI completely resets, and then the K line comes in contact with the D line. Then once we experienced a bullish cross, in my opinion, I think the price is going to bounce to the upside. And the real question is if this is going to be a fake out or not for the price to make a lower low and to fall off the shelf based on this tariff news here. So make sure you guys subscribe to the channel because we're going to be covering the news every single day. In the rest of this video, I'm going to share with you some important details that you need to know. Because if the next bullish cross below 20 for the stochastic RSI on the daily isn't a fake out, and we see the K line rocket above the D line and the stochastic RSI make an aggressive recovery back above 50 and eventually above 80, then that could be the major trend reversal signal that we need in the markets to come back up to back test the $1.27 to $1.3 trillion zone of resistance that I just talked about. And like I said in previous videos, it might take time to play out, similar to what happened here between August of 2024 until the 6th of November. I don't think this is going to happen right away. I think we're going to consolidate within this range for a while before we come back up to this zone of resistance for a few different reasons. Because it's officially reciprocal tariff week. Pay close attention, I'll explain what this means. I thought this was a great post from the Kobisi letter because Trump has called Wednesday Liberation Day with 20% tariffs coming on up to 25 plus countries. This will impact $1.5 trillion worth of imports by the end of April. So here's what you need to know. Trump has been discussing Liberation Day for weeks, where many traders believe that April 2nd will be the biggest escalation of the trade war in history.
You know, we've been very nice to a lot of countries for a long time. But I call it Liberation Day. April 2nd is Liberation Day. But today, as you know, we did something with respect to Venezuela. You heard about that. And that will be quite important. We'll be announcing some additional tariffs over the next few days, having to do with automobiles, cars, and having also to do a little bit with lumber down the road.
So currently live U.S. tariffs include 25% on all steel and aluminum, 25% on most Canadian goods, 10% on energy, 25% on all Mexican goods, and 20% on many Chinese goods. The 25% automobile tariff and 25% on countries purchasing Venezuelan oil will go live this week. On top of this, Canada has already announced reciprocal tariffs of $21 billion on U.S. goods. China has placed 10 to 15% tariffs on U.S. agricultural products, and the European Union has vowed retaliation tariffs as well. Mexico's president has already vowed to announce counter tariffs on April 3rd. So the result will be reciprocal tariffs on these reciprocal tariffs, and one of the largest trade wars in history. The average U.S. tariff rate is already up to 8% with tariffs announced this year, the highest since 1970. And I know you guys are tired of hearing the word tariffs, but it's important that you understand exactly what's going on. Because by the end of April, they're expected that 1946 high to be broken on the average U.S. tariff rate. Take a look at the Economy Policy Uncertainty Index. Policy uncertainty is currently above just about any crisis in modern U.S. history. We are seeing 80% higher uncertainty levels than the 2008 subprime mortgage crash. As a result, market swings are widening and we expect an extremely volatile week. The markets don't like uncertainty, and with Trump being as aggressive as he is on tariff, this is creating the most uncertainty that we've ever seen. Also heading into this week, gold funds have seen unprecedented inflows. So this is very good for people who hold gold because gold is currently making an all-time high right now. Gold ETFs has seen a massive $12 billion net inflows over the last 2 months. While the S&P 500 is down 5% year to date, gold prices are up 17%. So this does not happen in a normal economy. People run to gold when there's massive uncertainty. And also, Trump has threatened to bomb Iran if they not make a nuclear deal. He also said there will be a secondary tariff on Iran and potentially 25 to 50% tariffs on Russian oil. So Trump is just stirring the pot right now. And sure, in the long term, this could work, but in the short term, everyone's going to freak out because this is so different than anything that has happened over the past few decades. And Barclays believes that April 2nd reciprocal tariffs imposed by Trump will impact as many as 25 countries. U.S. sectors likely affected include automobile, pharma, semiconductors. And on Friday, Trump said that pharmaceutical tariffs are coming soon in the latest escalation. So as a result of this volatility, U.S. consumer sentiment has fallen to 2008 levels. Consumer sentiment is down 20 points over the last month to 57, basically meaning that U.S. consumers and retail investors have never been this pessimistic outside of a crisis or a recession. An economic slowdown has clearly begun, and it's clear as day that Trump has annihilated crypto investors this past week and since late 2024 for people who invested near Christmas time. So we're in for a big week, guys. Subscribe to the channel. We're going to cover all of this because on Wednesday, just a couple days from now, the External Revenue Service will also be established. And the Trump administration aims to generate $600 billion of tariff revenue per year. This is effectively a new tax going live as we speak. So given that tariffs result in prices increasing, being passed on to consumers like us, in some capacity, tariffs will also fuel inflation. Because in Trump's trade war, PCE prices across 9 impacted categories rose 4%, and the non-tariff impacted categories fell 2%. So inflation is expected to run hot in quarter 2 of 2025, which a lot of people think is negative for the crypto market. In contrary, last bull run, high inflation is directly correlated with that entire bull run. And when inflation came down, that's when we were in a bear market. So look back here to March of 2020. Inflation dropped from 2.3% in February to 1.5% in March, and then to 0.3% in April of 2020, and then to 0.1% by May of 2020. And if we look at the chart, when inflation was all the way down at 0.3% in May of 2020, that was right after COVID, and we were breaking out from these lows before starting that aggressive rally in the crypto market. So could we see inflation spike up going into quarter 2 of this year while we see a massive recovery in the crypto market? Because right now, CPI inflation is at about 1.94, it shows on this specific indicator, whereas United States inflation rate right here shows 2.8%, because between March of 2021 until June of 2022, when inflation topped out at 9.1, it was actually much higher than that. We saw the crypto market top out before inflation did. And then when inflation started coming down, we were already in a bear market at that point. So Trump obviously wants Jerome Powell to lower interest rates because he said it himself that high interest rates, no one gets wealthy when there's high interest rates, specifically the effective federal funds rate. But in order to drop interest rates, the Fed wants to see inflation come down to their 2% target. So it's a catch-22 here. The Fed's in a pickle right now because with inflation at 2.8% and expectations for inflation to come in hotter than expected for quarter 2 of this year, could that mean stagflation, the Fed keeping the effective federal funds rate higher for longer? Also, Japan's stock market is crashing ahead of Trump's Liberation Day. And what a coincidence that the Mr. Pool account posted the JP 10-year crashing into the yen, the USDT, Bitcoin, the dollar, the pound, and the euro, as one domino leads to another. And also Mr. Pool posted this image right here of waves with the sun right here, which is from the Wave and Ripple design book created by who? Satoshi Nakamoto, the developer of Bitcoin, with a massive wave on the front. And illustrations are based on the designs by a Japanese artist, Mori Yuzen. Now, why would he put the word Ripple in here? And in one image showing this massive tidal wave with a bunch of Bitcoin logos getting ready to smash into a central bank with the Monopoly Man right there. Also, the Japan 225 index right here is pretty much at its previous all-time high from 1990, but on the monthly chart, we can see a bearish cross on the MACD right here on like the 1st of November. And so if we mark each time that we've seen a bearish cross above the 0 line on the monthly chart, and what's happened to the Japan stock market going all the way back to the late 80s and early 90s, we can see that the most recent one right here just came in. The prior one was around the November of 2021. We saw the markets experience a pullback for 2 years. The time before then, we saw the markets pull back from 2018 until 2020. The time before then, we saw the markets pull back from 2015 to 2016. The time before then, we saw the markets pull back from 2007 to 2009 during the subprime mortgage crash. The time before then, we experienced bearish cross. The markets pulled back from 2000 to 2003 for the dot-com bubble boom. The time before then, the markets pulled back in 1996 to 1998 for 2 years. The time before then, the markets pulled back from 1989 and was in a bear market until 2009. So this is not a good sign for the Japanese stock market right now. Even back to 87, we experienced this short-term bearish cross, but then a bullish cross, but still it led to a short-term pullback in the market of about 20% right here before blasting off to a new all-time high. So just because there's a bearish cross doesn't mean that it's over right now, but it means to be on guard here because this is the first warning sign of a much bigger correction on the horizon. Because even if this is a short-term temporary fake out in the market, because we are in this bullish channel forming higher highs and higher lows, eventually this will break. So if this is a fake out and we experience a bullish cross back to the upside, eventually there will be a massive bearish cross on the monthly MACD. And even if we experience a blow off top like this, in my opinion, I think we will break this ascending support and do something like this for a much steeper correction in the Japanese stock market, similar to what happened from 1990 until 2009. For about 9 years, we just experienced lower lows, lower highs, lower lows, lower high, lower low, lower high, lowest low, bear market bottom, and then recovery from there. So we don't know how long this is going to last for the Japanese stock market before we make a recovery over the next 10, 20, 30 years. Because to go from the high of 1990 to where we passed it again, it took 34 years. And this is what a lot of economists and billionaires are preparing for. So the real question is, how will this affect the crypto market? Because just like in 2023, Bitcoin is actually repeating the same setup. So if in this book right here, Wave and Ripple by Satoshi Nakamoto shows this massive tidal wave of Bitcoin, calling it the Great Wave crashing over central banks, and yet we're seeing the same pattern play out as we saw in 2023, which is a double top bear trap where people think the markets are going to continue lower. So people enter into a lot of shorts and then market makers liquidate those shorts by sending the markets higher. This is exactly why I told you guys in previous videos, do not be surprised if the markets pull back for a higher low right now before eventually sending the markets higher. So we could very well be in one of the largest bear traps in history right now, similar to what we went through multiple times in the past at these key pivotal points in the markets where everyone thought that everything was over. And it was the perfect time to back up the truck, grab the bags, pack them and stack them, leave no bags left behind. Because each time this bull run this far, the market's reversed to the upside. It was the newbie investors that came in and they got all hyped up here. They bought every single peak in the market and they just said, I can't take it anymore. I've got to sell out because they bought the peaks and they sold the dips every single time. Do not be like most people. So a lot of people might be getting fooled right now because when we look at the Bitcoin dominance versus altcoin dominance chart right now, we experienced a top in 2019 and 2021 before alt season took off. And while a lot of people are saying we're skipping alt season, there's not going to be an altcoin season. I personally think there will be an alt season. It's just going to be different than what we've seen in the past. And the reason being is because there's over 13 million cryptocurrencies right now. So there's a lot of dilution in the market. And if you don't know what altcoins to pick, you could be left buying the wrong ones that completely miss out from the next major move in the market. So that's why our research team has identified the main market movers and which altcoins are going to be the biggest performers the rest of this bull run if we see a major recovery in the market inside of Altcoin Pro University. So what you can do is you can click the link in the description below, get started. It's only $97. You can pay as you go. There's no contract, no commitment. We have a 14-day money back guarantee. So if you don't get any results, or if you're unhappy for whatever reason, you just simply ask for a refund, you get 100% of your money back. So we've taken away all risks for you. And like I said, worst case scenario, you learn something new from everything that we offer. It's not the right thing for you. You get your money back. No harm, no foul. At least you won't live your life wondering what if this could work for you. Best case scenario is you go into the classroom, you go through 100 plus expert curated classes, you dive into the education like our altcoin research methodologies, and you discover how to do the quantitative research yourself. Also, you discover how to use Dex Screener, reviewing token socials, token distribution, bubble maps, native blockchain explorers, utilizing on-chain wallet trackers to be able to track what the whales are buying before the general public knows about it. Guys, our research team dives deep. If you want to understand how to look at tokenomics and know what to spot in terms of market cap, fully diluted valuation, circulating supply, total supply, max supply, and what each of those things mean and why they're important, and even different token unlocks for these projects, and how to identify and trade different narratives so you're not left sitting there holding your bags after buying the peak because you didn't know how to research these markets. If this is you and you have bought the peaks and you are currently down on your portfolio, then you need to join Altcoin Pro University. Otherwise, you're going to continuously make the same mistakes over and over again. I told you guys, I accumulated at the bottom of this market. And these major dips right here, I was buying as much crypto as humanly possible because it's the exact opposite of what the masses were doing during these periods right here. And I believe we're at one right now, or we are very close to it. Even if we continue a little bit lower, it's just even better entry point for the macro because of the tsunami of liquidity that is going to flow into the crypto market over the next decade. So you can position yourself early, but you have to understand exactly what to do. So plug in right now, join over 1,000 other people. And if you decide to lock in for the next year, it's only $970. You're going to save $194 and you're going to unlock exclusive bonuses like our 2-hour portfolio deliberation training, showing you how to construct a successful portfolio coin by coin. So before the next major liquidity injection happens into the market, now is the best time to organize your portfolio according to which trends, which niches, and which narratives inside of crypto are going to receive the most liquidity. Our team will show you how to do that. Plus, you're going to get access to our crypto tax mastery course, guys. 13 plus videos from our certified tax CPA and tax planner showing you exactly how to use the #1 crypto tax software in the world and the essentials to be able to write off as much as possible. Now, I'm not a certified CPA. I'm not claiming to be one. Again, I don't provide financial advice. These videos are purely for education, informational, and entertainment purposes only, but we do have a certified CPA in the back office teaching you guys what to do. So it's tax season right now. You need to put more money back in your pocket. And Altcoin Pro University is a no-brainer because of that 14-day money-back guarantee. But if you love it, stick with it, share it with your friends once we drop our affiliate program to be able to earn more passive income. Stay tuned for that, guys. I know you're going to love it. Look at this. Back in 2021, when alt season started, it was after Bitcoin's dominance topped out. If we look right here as well too, on the weekly chart for the relative strength index and the stochastic RSI, we can see that the RSI was above 70, the stochastic RSI was above 80, experiencing a bearish cross, and Bitcoin's dominance after that fell off the shelf when altcoins started to break out. So what are we experiencing right now? Well, we've seen a higher high on Bitcoin's dominance price chart. We are above 60% right now, but we experienced a lower high in the relative strength index to 63, which is a bearish divergence. Simultaneously, look at the stochastic RSI at 91 and 87 for the K line and the D line. We are in overbought conditions for Bitcoin's dominance. And so eventually, I believe that's going to lead to a rotation from Bitcoin into altcoins. And when that happens, I believe XRP is going to take off. Now, I do have a warning for you guys in the short term, because if we look at XRP on the monthly chart, which is the macro, we can see the D line is at 82 on the stochastic RSI and the K line is at 65. We just experienced a bearish cross on the 1st of February last month. Now, we've seen this happen before above 80. This happened right here on the 1st of July of 2017 after XRP had pulled back from about 40 cents all the way down here 2 months later to about 12 cents, dropping 68%. We experienced a massive bearish divergence where this bearish cross brought the K line and the D line to about 60 right here for a lower high on the monthly stochastic RSI, whereas the price chart broke out to a higher high for XRP's all-time high during that specific bull run. And we saw this consolidation from the 1st of July until the 1st of February while the stochastic RSI reset back here before experiencing that lower high. And so I think that's what's coming to the market. I don't think this bull run is over for XRP. I just think we're going to have a longer consolidation period over the next few months. Now, that could bring XRP lower, or it could consolidate above $2. I just don't know. Nobody knows. But a good thing that I'm looking at right now is XRP is currently above the high of 2021, and it's sitting right on top of the candle body close from the 1st of January. So to me, this looks like a massive macro trend reversal where we have the low right here from the 1st of March. We also have the second low for a double bottom trend reversal on the 1st of June. And usually during a double bottom trend reversal, what we see after the first low comes in, we see the price attempt to make a recovery, and this was 2021, to form the neckline, which is a major resistance, at $1.80 something cents. Whether you want to measure where the wick was at or the candle body close at like $1.60, doesn't really matter on the macro. I'm giving you an eagle eye helicopter private jet view of the market right here, because we go through this massive consolidation, which was that 2-year price suppression before an explosion, a breakout to a new high. XRP formed a new high, it broke the neckline, and it comes back down to back test it as support. So the longer that XRP holds on top of the 2021 high and the candle body close from the 1st of January of 2018, the better, because that acts as the springboard before the next major move in the market. And I believe that next major move will happen for XRP when we see total 2 break out. So we need to see total 2 break out. And so I think we're going to consolidate for a little bit longer, similar to what happened all through this phase right here from like July to November of 2024. And if I just clear the chart to make it organized and clean for you guys and zoom in here, and if I just trace this up for you, you can see how these ranges tend to play out. So with this pullback right here, I want to start to see higher lows get put in here as we coil up. The problem then becomes these reciprocal tariffs that Trump are announcing, and if that's going to lead into further sell-offs like what we saw happen from the 31st of January to the 3rd of February, or if the majority of this negative news and this bearish news is already priced in, and we're then going to see the positive news of these tariffs come in as the country generates more money. Also, what will push XRP higher is liquidity flowing in from these banks, because as you guys already know, Jerome Powell just said this.
Our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks that we regulate and supervise do that.
So with banks being perfectly able to serve crypto customers, it is documented that Ripple is used by the top 15 largest banks in the world. Ripple deals with over 100 plus banks, including some of the biggest tier ones, and it already covers over 80% of the world's crucial trade corridors. Ripple's enterprise payments are positioned to capitalize on crypto and traditional payout markets, global FX markets, the derivatives market, real world asset tokenization. I mean, fill in the blanks in the comments below. It's absolutely insane. With institutions and local payment service providers moving money around the world the way that information does today, with on-demand liquidity's expansion into nearly 40 payout markets around the world, representing 90% of the FX market, the proof is in the pudding, guys. Businesses can rely on crypto to deliver the speed, efficiency, security, and scalability. And it's confirmed that Ripple's payment network is being used by large financial institutions, with 15 of the world's largest banks working with Ripple's global consensus ledger. It's not a theory. It's not my opinion. It's just verified. So that, stacked with global liquidity expansion, the Fed potentially lowering interest rates, adding to their balance sheet, quantitative easing again, that would be the perfect storm of opportunity for XRP. And so that's why we have members all around the world joining Altcoin Pro University. This is really cool. You guys can access the map by clicking the link in the description below, getting started, and then just clicking the map at the top right here, and you can see where everyone is from. And so our goal is to create the largest network in crypto of intelligent investors. And if you guys want to do meetups in your local area, for example, if we just zoom in here, you can see the number on the state. Like in Washington, there's 16 people in Washington, and they're spread out all over Washington. So if you want to link up with anyone in your local area that has joined Altcoin Pro University, then you just tap this. For privacy reasons, I'm not going to do that, but you tap it, it shows their name, and you can send them a private message like you would on Facebook. So I think this is really cool. On top of our live weekly calls, the next call is coming up tomorrow at 7 p.m. Eastern Standard Time. It's the Technical Analysis Tuesday call with Paul. You guys can jump on, and the most important thing of this call is to teach you how to read the markets yourself. Candlesticks, trend lines, moving averages, creating your own custom charts. That way you can become an Altcoin Pro, the name of the company. So I appreciate you guys for watching this video. Let me know your thoughts in the comments below as we back up the truck all the way to the bank, grab the bags, pack them and stack them. You know what we're doing. We're leaving no bags left behind because the spending power of the dollar is just going to keep going down in value. That's a fact based on inflation, monetary print orders, cryptocurrencies, blockchain technology, and distributed ledger technology is going up in value over time. That's the truth. And together, we're all running to the top. I will see you on the next video. I will see you on bullrunners.com inside of Altcoin Pro University when you click the link in the description below. As always, you know what to do. Stay bullish.
April 15th, 2025. This is a huge date because it's the deadline for 2 high-paying tax credits that you probably haven't heard about, but you can still get if you take action right now. We've partnered with the relief consultants who are experts in the tax code who've recovered over $100 million for their clients so far. So if you're a business owner or an entrepreneur, listen up so we can get you help and reach our goal of recovering $10 million for the Bull Runners community before the April 15th deadline. So here's how it works. If you're a business owner who had employees in 2021, then you qualify for an average $150,000 check from the Treasury and possibly more with the Employee Retention Credit Program. So if you were told in the past that you don't qualify, get a second opinion now through the link in the description below this video, because there are rules and regulations that have changed just recently. So there's a high likelihood that you do qualify now. And if you sold your business or you shut it down, you still qualify as long as you were active in 2021. So don't miss out. Schedule an appointment with the link below. Just click business owner with employees if it applies to you. There's also a second tax credit that also ends April 15th. So this is for the bull runners who are self-employed in 2021. So if you were a 1099, not W-2, and self-employment was your primary income, the Treasury check for this tax credit can go up to $32,220 with an average of $17,000. So if you were self-employed in 2021 and want to see if you haven't claimed this credit, which nobody has from our community thus far for some strange reason. We've been talking about this in several videos. I don't know, man. Maybe you just want the Treasury to keep your money. But if you want to get money back in your pocket, then schedule a consultation. Don't be lazy. Do this right now before April 15th through the link below. Just click self-employed if you think you qualify for both credits. Let the rep know on the call. And by the way, if you have your tax returns from 2020 and 2021 for this credit, it will be a faster turnaround for you. So have them ready on your call, and they can literally tell you if you qualify on your first call to get you paid. So if you need more money back in your pocket for this bull run, take action right now, click the link, and let's get you paid.